Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good morning. Well, as promised, let's get in Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Good morning. It seems the global markets are in a better place, going by the cues that we've got overnight. And maybe Trump's tariffs get pushed back a little bit, but there's still uncertainty. That said, earnings season has almost come to an end, and we have plenty of earnings here to track. Cummins, we have SAIL, Welspun Corp. Anything stood out for you?
Yeah, good morning, Nigel, and thank you for having me on your show. Well, not really, I think, not from yesterday's earnings season, but there have been a few, I would say, outperformers in this earnings season as well. And they are scattered across various industries. Like, for example, cement, which you were very positive on. Large cap cement largely came in line, but smaller company like Birla Corp delivered an exceptionally good set of numbers. And then within the tech space, I thought Persistent and Coforge came with good set of numbers, but the rest of the industry really disappointed. Within the NBFC space, I was particularly pleased with Bajaj Finance, but a lot of other companies disappointed. Piramal Enterprises slowly getting into recovery mode in the NBFC space. So like that, if you go sector by sector, there are certain outperforming companies within that sector. But by and large, I'm not completely pleased with the banking, quarterly season, purely on account of very, I would say, tepid set of numbers coming from the banks, which were below our expectation.
Okay. Speaking of banks, Dipan, hi, morning. IndusInd Bank, in this entire episode, rather disastrous episode, the low that it's hit is closer to 680. I mean, basically, the stock has been below 700, but it rallied from there, and now it's at 800. And more skeletons keep tumbling out. And this is just, it really shakes confidence, right? That this is not an inadvertent entry by, some member of the team. But this smacks of a deeper rot. While it's a very big story otherwise, and we'll discuss and debate it, what about the stock? Could it fall more, or do you think it's all in the price as well?
No, I think that largely it's got discounted. And it's trading at extremely attractive valuations, price to book, price to earnings. Typically, banks in the past who have got into such kind of a mess, they trade at those valuations. And I think all eyes are on the new team which takes over, and give them a year or so to kind of get the house in order. And you may see again the bank recovering lost ground. So I think by and large, investors have factored in all of these negative aspects. But the banking industry per se is doing well, and interest rate cuts and improvement in liquidity, higher credit growth will help IndusInd tide over this crisis which they are in just now. And if valuations go back to 1.2 times book, that's 30-40% type of appreciation from here. So I think investors sticking in over there, just as we are. I think we are also investors of IndusInd Bank. The time to sell is gone, so you just hang in there, I guess.
Yeah, I mean, the stock is halved. I mean, from the peak was in January 24, 1.5 years back. The stock used to be a 1,600 rupee stock. Today, it's 800. So it's halved, and I think that's the point that Dipan is making. The worst is already in the price, and you're waiting to play the turnaround now.
In fact, now it's eroded all the returns over the last 3 years. In the last 3 years, the stock is down close to about 10-13%. But Dipan, is it time to buy at 800? It may not be time to sell, but at this price, would you look at averaging out?
Since now he's smiling. Now Dipan is smiling.
You're asking the wrong person.
You're saying enough exposure I have already.
Yeah,
no, but for a neutral person, Dipan, this is actually a serious question, right? I mean, there will be people out in the market who will wonder whether this is a great time. You buy, a company in disaster and in crisis. But is that approach, is that a advisable approach, a fresh buy now?
First of all, if investors want to increase their exposure to the lenders, the better way to do it would be to the NBFC. So I prefer Bajaj Finance, L&T Finance, Chola, companies like that. You could even look at gold loan companies. I think Muthoot came with a very good set of numbers, and a lot of other banks also expanding their gold loan portfolio. You could look at some other banks focused over there. So there are a lot of choices within the lending space. And I prefer the NBFCs because the lower interest rate clearly benefits them, and then certain changes are taking place in the risk weightages as well. And they are far more flexible when it comes to lending and growing the loan book. So that's why I would avoid IndusInd Bank at this point of time. Just playing for recovery is not a great strategy. It doesn't really work out. 1 year could be 2 years, 3 years, who knows, So I wouldn't advocate buying IndusInd at these levels.
The other financial stock, Dipan, in focus would be Max Financial. Because the CEO, Prashant Tripathi's sudden resignation would have come as a setback, would have taken people by surprise. If the stock corrects today, is it an opportunity to buy?
See, Rima, I have kind of given up on insurance. I spent years and years trying to understand the business, try and value it, see what variables make it tick, and what are the kind of factors one should look for. But look at the 10-year track record of the industry in terms of delivering returns to shareholders. That is very, very ordinary, well below the Sensex Nifty returns as well. And I've come to the conclusion that this industry is heavily regulated, and to value it is a bit of a challenge for ordinary investors, even professional investors. So I'm kind of, getting underweight to nil weight insurance companies. When you want to play the financialization scheme, I think there are better choices, better segments within that, like the wealth managers are there, the asset managers are there, there are the stock brokers, the exchanges. I think the better way to play financialization is through those segments than through insurance companies. So I'm just kind of, getting very, very underweight all of these stocks, Max Financial included.
Welcome back. In conversation with Dipan, awaiting the opening in about 17 minutes. Dipan, lots of earnings came out over the overnight. Midcap earnings, important ones like Cummins, IRCTC, Bata. Your thoughts? Did you track which one stood out for you?
Not really. I think that none of them really, checked all the boxes and interested us in taking it up as a fresh idea. But, companies like Cummins and all, when the results are a bit down and maybe the stock price reacts negatively, those are good entry points because at the end of the day, I think, over a longer period of time, these companies do deliver exceptional returns. And it's bang in the middle of this capex cycle and benefits from many other, variables which are in play. And sooner or later, the uncertainty around exports also will evaporate, and that particular segment within Cummins also can do well. So it's good to buy a great quality company with strong competitive advantage when the chips are really down. And 2-3 years down the line, they turn out to be great, performers. And there's a lot of comfort in big blue chip names like Cummins.
Okay. That's Cummins. So if there's a dip, buy it. Got that point. What about railway stocks, Dipan? This week on and off, we've seen some interest come back. Yesterday, IRCTC reported numbers. Numbers were pretty decent, actually. Quite steady. But railways, any exposure, any interest?
No, not really. I think it's a great business, and government have been increasing its budgetary support. But unfortunately, last 4 years, the budgetary support has stagnated, and that has resulted in order books peaking out, or rather visibility of order books peaking out for a lot of railway companies. And look, even after a 30-40% type of a correction, there is still very high valuation. But we can discuss one company. It's a really small one. It's called Kernex Microsystem. And when I studied that company, it has I think 1,800 crore kind of a order book position for this Kavach. And that's about 16-17 years it's trailing 12-month revenues. Don't look at the P multiples because, that's just crazy because it doesn't make any profits at this point of time. But certainly a company worth watching if they can execute and deliver on that order book position. Having said that, it's a company in which we haven't invested as yet, but it is on our watch list. And at some point of time, we may invest for ourselves and our clients.
Okay, so that's a full disclosure. Kernex Micro, a stock that's on your radar and that you like.
But what's your view? Jindal Stainless, you don't like the carbon steel players too much, but this is more of a converter. Higher EBITDA per ton. There is some outlook with regard to volumes as well. What's your take?
No, I think it's a good story. And you could also add the fact that more and more stainless steel is being used in building, construction, in improving structures. And then we have this entire Amrit station. Some program is there of the government where they want to improve the modernize the station. So a lot of stainless steel can get consumed over there as well. And more there's preference towards using stainless steel utensils as compared to other metals. So yes, it's a good story. And steel companies like Jindal Stainless and all, you hold them for 3, 4, 5, 10 years or so, and they turn out to be great compounding machines. They can easily compound at 8, 10, 12% or thereabout. And if you buy them when the cycle is down, the returns can be even higher. So I think it looks good from our point of view.
Okay. All right. So that's a thought on Jindal Stainless. Dipan, thank you very much.
Dipan, cement has come in your favor.
And now this is steel.
And now after a while on a metal company, you're a little bit positive also, Dipan.
Nigel is thrilled.
Yeah.
You could, if I may say so, you could call it the Nigel effect.
Oh, the Nigel effect. Now the sector seems to be coming in Dipan's good books.
So
Nice.
persistent, he is so persistent. Some of the time you have to recognize his enthusiasm. Yeah.
Oh, lovely, lovely. Now Nigel's party. Breakfast party after the show.
Only facts and figures, Dipan. Cement, we had pointed out in March that it's a global is in a bit of a tizzy, so maybe domestic themes could do well. And I think things have started looking up. On metals, anyone's guess. But as you said, and as Jeffries is saying as well, it appears Jindal Stainless at least is better placed in comparison to the steel names.
A breakfast party after the show. Just repeating.
Whatever you want.
All right. Thank you so much, Dipan. Great conversation. You have a good day and we'll connect again soon.